Hello everyone. Here are your answers for Chapter 6 homework. And we're going to start in with number 37. And we're going to go to a conference. And lodging is deductible, meals half, 50%. Registration for the conference is deductible, and transportation to get there. So a total of $948 for letter A. For letter B, this is entirely dependent on whether you can make an argument the CPA license makes her a better at the tax profession or is a new profession. If it's for a new profession, it's not deductible. Now I'll tell you, your authors consider that not to be deductible, and that arguing that it is the same profession is what they would refer to as an aggressive position. I don't know that I would agree with that. I think that you can make a very good case that this is not a new profession, but is actually enhancing her current profession, and could make that deduction. But if you were concerned about that, there's also the tuition and fees deduction we learned about earlier, and the lifetime learning credit. One or the other. You can't do both for this if you can't make it a business deduction. All right, there's 38. We are looking at some expenses for clients. Transportation is fully deductible, but meals and tips is only half, or 50%. And the party, because it's also meals, assuming that this is meals, is half, and $750, and for a total of these expenses of $3250. So 39 is a home office situation. We have income, we have expenses that would be deductible directly. Get our income before the home office deductions. Our home expenses for the entire house, we then multiply that by 25% because that's the part of the house that's used for a home office exclusively. That gets us $2113. We subtract that from our income, we get $388. It doesn't, $387 depending on how you round, and that's your income without any depreciation. Depreciation is always our last expense, and so that is deducted. It gets it down to zero, but you can't have a loss on a home office, so you only can deduct $388 instead of the full amount given, the $1,500. The rest would be carried over to future years. So his income would be $45,000, just like it was before they considered the home office. Now, just so you're aware, chances are that there will be a 1099 received for part of this income at least, and therefore, while it ends up being zero, it's not a good idea to just not report it. All right, you need to show this detail, because there's the IRS is going to expect this $4,000 to show up as income and needs to see the deductions against it. So, just from a practice standpoint. Okay, 42. Betsy, I should say, is looking at her some deductions for some equipment and stuff she's buying. She could take $175,000 up to the amount of her income in the business if she only used Section 179. Then the other $250 would carry over. If she used bonus depreciation, she could take all $425,000 she spent, because it all qualifies as bonus assets. So those are your two, depending on how you understood the directions, whether she could take bonus or not. If she was not going to only use Section 179, then this is what she would get. Then she would, and the rest would carry over. Okay, 43. Personal residence turned into a rental. So at the time that it converted, you use the lower of the fair market value or the original cost. So if the fair market value was lower, you use the 210. That's the fair market value. 73.18. Okay, or which is this calculation here, or you can use this from the table. It gets the same result within a few cents of each other. If the fair market value is higher than the cost, we use the cost. So the 250, all right, same formula or the same factor from the table because we're using it for the same period of time. And remember, this is about the fact that it's mid-month convention, and so you start the depreciation. Even though you got it at the beginning of the year, you started on January 15th, so you're actually 11 and a half months, and that's considered in this factor from the table. All right, 44. We bought a car. It was 21.5, but we have a limit on cars for bonus. If you elect bonus, 18,100 for year one. All right. Okay, Ruben is going to buy a warehouse. You need to know what his depreciation on this warehouse is for 5 years. 3 years, and then another partial year. So in the first year, you can use the table. Okay, this is non-commercial, non-residential property or commercial property. So you use the table based on the month that you purchased it. Then you take the whole year for 3 years, and then you take 2.5 months in the last year. So you're going to take and divide by 39, divide by 12, multiply by 2.5 months because it's March 1st. That's January, February, and half of March. So you always do it on the halfway through the month in year 5 for a total of 269, 256. All right, 52. We've got a trip. We're partial business, partially fun or vacation. But the primary purpose is business, so you get to deduct all the airfare. We split the lodging, 11 out of the 16 days, the travel days and the business days compared to the entire trip. Meals the same way, except then once you get the 11 out of 16 days, you then take that amount and divide it in half or multiply by 50% and add that up and you get 29.22. 54. This is a situation of hobby versus business. If it was a hobby, report 25 as income, but no expenses. If it was a business, you can make that argument. 2,500 is income with 9,050 as expenses, so you'd actually have a loss under Schedule C of 6550 that you could use to offset income from other sources. All right, 55, the qualified business income deduction. 20% of the amount we made from our business, or 20% of taxable income, whichever is lowest. In this case, 20% of taxable income is $24,000. And then 56, calculating our self-employment tax. We first multiply by 0.9235. All right, then we get that whole amount is subject to the Medicare part of this self-employment, and we only pay Social Security part up to $132,900. All right, and then you add those together, makes our total self-employment. Divide it in half, and that's how much you could deduct for AGI. You pay this much, add it to your other taxes, and this is how much your deduction is. Don't get too excited about that deduction. And some calculations for our last one, several assets and calculating depreciation. This is all of the regular depreciation for each of these assets using the tables, multiplying the original cost by the tables based on what year, and then they add it up. And then if you took on the new assets you added in 2019, so these are all added in previous years. These were added in 2019. So if you took bonus, you could take up to this depreciation, bonus depreciation, $23,000. All right. If you took regular makers and didn't take bonus, This would be how your calculations, 20.2 on each one of them. They're all 5-year property for a total 4,600. And then the office building, either way, because again it is straight line. Use the one from the table based on the month that you purchased it. Now that would look like on the form 4562. Let's make this a little bigger here. You put your bonus depreciation. If you were taking a bonus depreciation for the two assets, for the computer and the printer of 5,000, that would go here in part 2, line 14. The depreciation on old assets, stuff that were purchased previously, goes on line 17. Your new assets, ones you're added in 2019, if you're not going to take bonus, okay, goes on in part 3, line 19, based on what kind of property you purchased. So there's your warehouse or office building, I should say, here, added in 2019. The listed property is on page 2. This is where the auto would go. It's a listed property. If it was bonus, you do 18,000 here and then carry it over here. Okay, so the bonus happens here regardless. Whatever depreciation, whether you use bonus or regular for the car, goes under listed property. If you decided to not do bonus, this would be 3,600. It would carry forward to 3,600 here, and then you total it all up, all of your depreciation, and end up with line 22. So that's how you report it on your 4562 form.